Hello and welcome to the third episode of Intimate Investing. As you can see from my portfolio insight, this week has been a massive week of diversification for me. The platform that I use, Freetrade, they've actually released fractional shares to the first 500 beta testers that signed up on their forum, and I was one of those 500. So yeah, the implementation of their fractional shares feature has made it far easier for UK investors such as myself to diversify a lot more, especially into the expensive tech stocks. For example, Alphabet or Amazon, they're both pretty out of bounds for myself at least. When you're forced to buy entire shares, and I mean on the extreme end of that spectrum is Berkshire Hathaway Class A. I mean there's absolutely no chance of buying some of these shares in their whole form. So it's massively beneficial to have the option to use fractional shares, despite there maybe being some drawbacks in some areas to buying fractional shares. I mean, it really is a great asset to have. So as you can see, when you compare my portfolio now to my portfolio last week, the tech section, the mining section, and the telecommunications section, they're all new to my portfolfolio. There was absolutely nothing in them prior to this. Finance and energy, they're still pretty overrepresented at the moment. That really isn't intended. It is just because I'm quite early in my portfolio, and I did see some really good deals there and ones that I thought were worthy of my money. Especially when the US shares, I had to buy them their whole shares. So finance and energy definitely will be coming down substantially. I mean, I'll still be adding to them every week, but as an actual portion of my portfolio, they'll be coming down substantially. So as you can see, it's now been 5 weeks since I started investing. The first deposit was on the 2nd of April, and it's now the 10th of May. So we're coming along quite well. Still very early in the portfolio building, although some definite progress there. So we'll just have a look at the investments. I'll go over the ones that the positions that I've had, the ones that I've changed over the last few weeks, and then we'll get stuck into the new additions and what's going to be going forward. So Aviva. Still a fantastic stock. My biggest stock by far. That isn't really my intention for the portfolio. However, it just so happened that Aviva was a good price. I do think it's a solid dividend paying stock, and I did want quite a large holding in it. Maybe not to the extent it is now. I mean, it is very represented at the moment. However, it will be, as a portion of the portfolio, it will definitely be decreasing. So I've increased my position from 202 shares to 211 shares, so I bought 9 more this week. I managed to get my average share price down from £2.51 to closer to £2.50. And I mean, while I will still be adding to this stock, I'll certainly be adding to it a lot less than the other ones. I would like to get more of a balance between my UK dividend paying stocks, and because the value of this one is so much higher than the rest at the moment, I think it'd probably be preferential for myself to put more allocations into other UK dividend paying stock, just to sort of not have all my eggs in one basket and not too large a position in Aviva, although it certainly is still a good stock. I mean, I really do think it will weather the storm of coronavirus and the downturn, and it does have the cash reserve to see it through. So, I mean, if there is another dip, I mean, there is the potential for me to try and average down my cost a little bit more. The price actually did come down a bit this week. I don't think you'll be able to see it very good on these the graphs provided by Free Shares, but as you can see, I mean, it did dip down to sort of under the 240 mark, although because the US growth stocks, the fractional shares had just arrived, they did take precedence over Aviva. However, if there's another dip, I would like to try and get my share price down to about 240 if possible, although then again it will have to dip significantly because I'm not too willing to put too much of a larger position in Aviva at the moment. Last week it was 5.41% down. It's now 1.33% down. I do think there's a lot of gains, like actual share gains, the price of the share to go up. I do sort of think there's a lot of that coming in the coming weeks. The dividend percentage, the yield's also fantastic on it. It's a great dividend paying stock, and I'll definitely buy more going forward. The next two will be the two oil ones, so Shell first. Shell's actually cancelled its dividend, it's cut its dividend. So I mean, the price has dropped significantly again. I've been trying to average down a little bit. I'll probably continue to do so, but again, I don't want to put too much money in this because it is one of the higher. One of the stocks that I've allocated more money to. I mean, obviously, you can still get a good bit higher than this. It's not to the extent of allocation as Aviva is, although it certainly won't be top priority at the moment. So with Shell, last week I owned 24 shares. I now own 26 shares. I've taken my average share price down from £12.78 to £12.76. And I definitely will be adding to this one more. I mean, I might even buy a share or two in the coming week. I'll probably be putting small allocation towards it going forward until it gets to the price where I don't really think it's that viable anymore. I mean, obviously oil's down right now. The share price isn't going to remain where it is indefinitely. So there's certainly going to come a point where my allocations for Shell as well as BP come to a sort of standstill. Although that's still far in the future. I think the share price is still fantastic. And I think there's a lot of recovery to come. So last week at the closing, my investment with Shell was down 6.19%. It's now down 0.94%. I mean, that is partly a result of my average share price going down from me trying to average down. Although the share price is sort of recovering, so I do believe there's a lot more gain to come from this. I will continue allocating funds towards it. However, as I said, growth stocks as well as ETF, the sort of index funds that I need to be adding more to, they are taking precedence over the UK dividend paying stocks at the moment. So the next one's BP. I've increased my position with BP from 100 shares at last week's closing to 102 shares now. I managed to take my average price down ever so slightly. Nothing that warrants mentioning. Sort of 0.10 of a pence or something. Absolutely nothing. I mean, it's negligible. Last week at closing, my investment was down 2.67%. It's now positive 2.95%. So as you can see, the recovery it sort of mirrors that of Shell. The share price is increasing, and I imagine it will continue to do so. So I will be buying more of BP similar to Shell until the oil price starts to make it a little bit less viable for me. But yeah, for the foreseeable future, this will be featuring heavily in my portfolio. Lloyd, there's not really a lot to mention here, to be honest. I mean, I bought 2 shares. That's, I mean, it's really nothing. That was just the result of me having sort of like 60 pence or something left over in my Freetrade account. The average share price has remained static. That hasn't changed whatsoever. I mean, Lloyd's, it's not really moved. Last week at the closing, my investment was up 0.86%. It's now up 0.79%. So it's dropped slightly. I do think Lloyd's is another one that I'm going to be investing in. I'd like to get a few thousand shares in it to get a nice stable dividend. Although again, it's probably going to take a while to recover. I mean, if the UK economy isn't doing so well, I mean the Lloyd share price is going to quite accurately reflect that. So I mean, I don't know. There's going to be no immediate gains, but I do think it's going to be a slow trod to maybe. I mean, I'd like it to get to the sort of 50 pence mark. I mean, if I can get a reliable dividend and then sell, or have the option of selling around the 50 pence mark, if things do start to look a little bit worse, the outlook isn't quite as I'm imagining, then that is a possibility too. So I mean, I'll definitely be adding more into Lloyd's. I mean, nothing massive. I mean, the same as all the UK dividend stocks, it's going to be very gradual. Other growth stocks and the ETFs are going to take priority right now. So, I mean, they will have funds allocated to them, but nowhere near the extent that they have while I was relying purely on the UK dividend stocks before fractional shares has arrived. The S&P 500, I've not added to this. I mean, it's going up more. It's actually the best gains I've had thus far out of a single investment. This is, I mean, at the end of the tax year, at the end of this sort of financial year that I'm going to be my first year investing with this portfolio, I do imagine it's going to take up a considerable portion of the portfolio. At the moment, it's pretty inconsequential at the moment. I mean, it's really is nothing compared to the other ones. I mean, Aviva has over 3 times the amount of funds allocated to it. So, I mean, right now it's nothing. I think it certainly will probably end up making 20, 30, I mean, probably 20, 30% of my entire portfolio. So I think in the coming weeks I'm going to be biting the bullet, finally investing into some more index funds, and this one's definitely going to feature heavily among those index funds. So the next one is Rio Tinto. This is a company. I mean, last week I thought I would diversify a lot more. With the advent of fractional shares, that does make it a lot easier to get into the sort of US growth stocks. But I did want some more diversification in my UK stocks, especially those that pay a good dividend. And as a result of that, I've decided to invest in both Rio Tinto and BHP. I mean, they're both mining companies. They deal in commodities. They're both very decent dividend payers, and both of the yield somewhere between 8 and 9% at the moment. So I bought one share of Rio Tinto at the moment. I'm probably going to be buying more going forward. I mean, it's never going to be a massive holding, but I would like to sort of buy a share every couple of weeks and gradually increase my position in it. I mean, the share price is pretty stable. I mean, it's good growth on it. You can see the sort of commodities crash around 2015, and I mean, that is always a risk. I mean, after coronavirus, demand might be lessened and everything, but you can definitely count on sort of commodity prices gradually going up again. I mean, if there is a crash, it's always going to go back up, and if that dividend is seeing you through, then I mean, you might have some hard times for significant periods, but you're always going to come out in the clear eventually. And having that stable dividend stock, I mean, some investors might not value it too much. It really depends on what your goals are, and for myself, it definitely is an asset. So the next one is the FTSE 100. I mean, this is a new investment for me as well. Again, this is just aimed at sort of diversifying more into some ETFs. Although the thing about the FTSE 100, I mean, the gains aren't fantastic. I mean, if you were to look, get a graph, get the Nasdaq 100 on that, get the FTSE 100 on that, and get the S&P 500 on that. If you're to look at it, I mean, the sort of the 5, 10 year, 15 year, 20 year outlook for the FTSE 100, I mean, it does look substantially worse than does the Nasdaq and the S&P 500. However, the dividend yield at the moment, as well as the diversification that it gives, is something that's quite important to me, and thus I have decided I'm going to have a position in the FTSE 100. I mean, the dividend yield somewhere about 5%. So I mean, the growth's definitely there. I mean, it's dropped significantly due to the coronavirus. It's at £5.85. This individual fund is, which sort of tracks the FTSE 100. So in the next few years, I envision it to sort of regain what it's lost, and I mean that's a decent percentage gain as is. Although with that dividend sort of keeping you steady while it gets to that point. I definitely think it's undervalued at the moment, and I do think right now is a good time to be investing in it. I mean, if it were sort of at its stagnant point, I mean, before the crash, I don't think it would have been anywhere near as enticing to me. But I do think because it does have a lot more to make up for, and it's one of the slower indexes in sort of regaining its past point, that I think it's definitely one to be buying into right now, and it is going to feature quite heavily in my portfolio eventually. So the next 4 is just the growth stocks that I've purchased using fractional shares. I mean, they're all big names. You'll know them, I'm sure. They're all very stable stocks. They're fantastic growth stocks. I was actually a bit apprehensive about buying into these now. The pessimist in me, if you look at all these, I mean, they're all sort of shooting back up to their all-time highs, or even making new highs in the case of Amazon. Now, I mean, the pessimist in me thinks that there is going to be another slight crash with US stocks. I mean, I know the federal government is feeding into them quite a bit, trying to ensure that the market doesn't fall. But yeah, the pessimist in me does sort of think that there is going to be a second crash, similar to what we've seen in past depressions, etc., and crashes. So I'll certainly be investing in these tech stocks, although I really would prefer to get a better entry point to them. I've owned a lot of these stocks in the past on other platforms, and they are all decent stocks. And I am young, so I mean, these are the sort of stocks that I should be aiming for, and I will be adding to them in the next few weeks. Although I really am hoping that there is a I'm not hoping there's another crash. I mean, there's going to be fortunes lost, etc., etc. But for my personal circumstances, another dip in price for these blue chips US stocks, it would be very beneficial and would allow me to get a larger position in them without feeling that I'm sort of in a dangerous position. So I certainly will be buying more of these in time. Probably next week even as well, although not with the sort of momentum that I'd like to be, just because I don't have that full confidence there as of yet. Of course, things will become clear in the coming weeks, and I will see how it goes. They'll definitely feature in my portfolio, although we'll be monitoring the US stock market certainly. The next one is BHP, the same story as Rio Tinto. It's a UK mining company which it pays a very, very stable, decent dividend between 8 and 9%. I think there is still some gains left to recover from its price. The price crashed due to the coronavirus. Again, you can see the price, the commodities crashed in 2015. I couldn't really decide between BHP and Rio Tinto. Therefore, I thought the extra diversification in investing too would be beneficial. So, there's not really much more to say. I'll be gradually investing into this one as I am with Rio Tinto, and just to have that exposure to the mining commodities market as well as getting a stable dividend. So the next one's Berkshire Hathaway. Now, Warren Buffett, he has mentioned in a few of his investors' meetings and shareholder meetings that while he does have a lot of liquid and he does have that built-up cash reserves, he is quite hesitant to make any new investments at the moment. Now, that is difficult to pinpoint that, whether it's sort of the lack of good investments he sees. I mean, similar to myself, the US stocks are quite high. The buying point isn't there. Now, he could be thinking along those lines, or I mean, he could sort of be thinking there's another crash due, and I mean, that really would not be unsubstantiated view. So, I mean, with the amount of liquid that Berkshire Hathaway has at their disposal and their unwillingness to make new investments, the lack of rebound with this stock, it really is of least concern. I think I will be investing in this heavily. Okay, the returns haven't been quite as good over the past few years as the S&P 500, but I really do think that the lack of rebound has given a brilliant entry point into Berkshire Hathaway. I think when you look at this stock and the other UK growth stocks which have shot back up, this one definitely offers a lot more value for money, and I think it will be really, really interesting to see how they do when they sort of bite the bullet and finally do begin reinvesting all this stockpile of cash that they've had. Facebook the same as Microsoft, Amazon, Apple and Alphabet. I'll be adding to it slowly as well as some other US growth stocks. I would like the price to dip a bit more before I can get a better position into it, although I will be gradually getting there regardless. The next two are Vodafone and BT. Now, as you can see from the sort of 5-year graph here, it has not been kind to investors in the slightest. I mean, yeah, the dividend yield has been fantastic. I mean, they've paid a good, stable dividend each year. But the capital loss from the share price, I mean, it might have been offsetting that capital loss, the dividend. Although it might well not have been, I'm not too sure. It has been significant. Telecoms has been hit hard the last few years. I do think we're sort of past that point. I mean, we're down to a price where I really do think that it's far more likely to start gaining momentum than it is to drop more, as it has been doing the last few years. I think the same story with BT as well. I mean, it's an even more stark drop for BT. I don't think these are ever going to be massive positions for me. They're both very good dividend payers, as is most of the telecommunications industry. I mean, if you're to look at Verizon, AT&T in the US, so I think I will stick with it. I'll slowly be investing more, and I'll be sort of, I don't know, just dipping my toes in, seeing how it is and seeing how they perform. I thought I'd split between them. I really couldn't decide which one to go for. With BT, I mean, the potential gains are better. Vodafone, bigger company, more exposure to different markets. Although I did think, just to sort of minimise the risk and diversify slightly more within the industry, that I would go for both. And I'm also leaning sort of towards AT&T and Verizon too, just to sort of get a better spread between the companies. So again, my heart isn't completely set on these two, or telecommunications in general, although I would definitely like far more diversification between industries. So for now, I think I'll hold. I'll probably be increasing them ever so slightly each week. I'm sort of seeing how the outlook is, see how they're going to be doing going forward. Although yeah, certainly not stocks that I am sure of, or I am fully confident about. So yeah, that's us gone through all the buys of last week. There has been a great deal of diversification when compared to my portfolio the previous weeks. Now going forward, I think next week there is definitely going to be a lot of index funds, the ETFs going in, so I'm going to try and make a significant allocation toward my S&P 500, possibly the FTSE 100, or possibly even the FTSE 250, just for that greater diversification. I definitely want to get into the Nasdaq 100, although that might not be next week, that might be in the next month or so, taking out a significant position in that. I'll probably be adding minimally to my UK dividend stocks. I mean, I'll probably put a little bit in, although not very much compared to the last few weeks. The US growth stocks, I'll be adding to them a little bit, I think, and probably also putting money into other ones. I mean, there are other ones that I'd like to get a position in, sort of the financial services and things. I'd like to get some PayPal, some Visa, some MasterCard as well, some other ones. Although mostly it will be focusing on getting those indexes a bit higher. I mean, they really should be the top of the list by a good margin, the S&P 500, the Nasdaq 100, and then the FTSEs as well. So I'm going to aim, it's going to be gradual. I'm going to have to get them up week by week, contribute a significant portion of the weekly allocation. Although I am going to start that starting next week. I would also like to take out, I've been talking about this for every video I think since I've started this, but legal in general, that I would like to be in one of my dividend stocks, one of the greater sort of constituents of the UK dividend stock portfolio. So definitely next week I'm going to take out a small position in that, even if it's sort of only £20-40 or something. I mean, I definitely would like to get one started there, just to sort of counterbalance the dominance of Aviva. So yeah, I think that's probably it. There's going to be definitely far more diversification going on from here on out, especially with the advent of fractional shares on Freetrade. So as you can see, with this portfolio breakdown, last week it would have been primarily finance, energy, and then a small portion into other. Going forward, the other section, which is a catch-all for the ETS, trust and cash, that's going to be rising significantly. Finance and energy as a portion of the portfolio will be dropping, despite me still adding to them in smaller increments. Tech is probably going to be the other one that's going to rise significantly, as well as the other section, just because of the US growth stocks that will be being allocated to substantially. Mining to the Rio Tinto and the BHP, that'll be going up. I mean, not as significantly as the tech section or the other section, although still a decent amount. And telecommunications, I'm not sold on. It will be increasing slowly, certainly, but just not as much compared to the other sections. There's also going to be some more sectors coming into here as well. I'm going to be trying to get more and more diversification as time goes on. I mean, the ETFs do provide a decent amount of diversification, but actually trying to select the companies that I'd like in each industry as well, I do think that is important. So yeah, I hope you've all enjoyed the video, and I'm going to be doing these weekly. There's going to be none of the 3 week waits, as there was between the first and second video, because I mean, honestly, the portfolio now, I mean, it is diversified. There's going to be changes every single week, to probably most of the allocations, most of the constituents of the portfolio. So it certainly will be far more interesting than sort of the first few episodes of the portfolio update. So yeah, I hope you've enjoyed the video, and I shall see you for episode 4 next week.